What's up, you guys? Welcome back to my channel. So today's video is about technical trading. So what does it mean to be a technical trader, and what do we incorporate in technical trading? So I wrote down price action. So this is whereby we'll be looking at the previous price history so that we can actually determine where price is going. So we focus on support and resistance, patterns and structures. We'll take a look at trends, candlesticks. So I'm just going to explain a little bit about indicators, though I don't really use them. So if you want to know more about indicators, you can actually Google and find any other video that can actually talk to you about this. Because like for me, it doesn't really work as much as I do, like as much as I want it to work. So like it actually hinders me to get maximum returns. So I don't use them anymore. So in on the indicators, I'm just gonna just give a definition of oscillators, moving averages, then volumes. So support and resistance. I'm going to start with support and resistance. I'm going to show you on the charts. So the support line. So I'm just going to show you is either if it's a horizontal line or it's a trend line. So I'm just going to start with the trend line. So I'm just going to draw it straight up to the top here. So what makes this a support or a resistance? So as you can see, we have the first touch here, the second touch here, third touch here, and the fourth touch here. Well, that makes this line either support or resistance, right? So when price is actually moving up, price is hindered from breaking this. So we are getting resistance from this line, so that makes it resistance. Then when price is actually moving to the downside, we're no longer pushing resistance into this trend line. So this is now acting as support. Price is now moving to the downside. I can draw another line on the bottom here. So you see here. So you have first touch, second touch, and we are having almost the third touch. So this, when price is moving to the downside, this is resistance, because price is hindered from moving to the downside by this resistance. Then when price is now moving to the upside, this is now acting as support on the bottom of the price. Now price is actually moving up. Now it's resistance. When you're moving to the downside, this is now support. When moving to the downside, this is now acting as resistance. When moving to the upside, this is now acting as support. So I hope you understand that. Then we go to the next. So still on support and resistance. So now on the horizontal type of it. So we actually did the trend lines. So the horizontal type of it. You can see here. So I'm gonna put two lines just as I did on the channel. So you can see this area. So just move it like this. This is the highest highs that we have. First high, 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 then lows on the touches here. So when price is moving up, it's gonna face resistance here. That's why we call this resistance. But when price is actually moving down, we get this as support, because price being supported by this line moving to the downside. So when only price is facing a hard time to break this, so consider this line as resistance. So that's how you take into consideration if you want to buy or sell. So you can actually buy the highest high. So if you have like three touches here, that's the maximum that you can actually get. Then the lows that are this side, then you can actually see that you can actually buy at the lowest point, then sell at the highest point. So these are the highest points that you can get, and you can sell on those ones. So you sell on support from up, then you can actually buy from support from down. So that's it for on support and resistance. So the next it's gonna be patterns and structures. So I'm just gonna combine with trends also. You can see on trends also. So let's hop in. So onto the charts, you're gonna see um, this line that I've drawn. They are forming sort of like a pattern, if you know what I mean. So what pattern is this? It's a channel. So this is the upper part of the channel. This is the lower part of the channel, forming price is actually moving in a channel. So this one, since it's moving up, we call it an ascending channel. So like this is part of like patterns that you can actually incorporate in your trading. So we have a lot of patterns. We have head and shoulders, we have flags, we have ascending channels, we have descending channels, we have a lot. So we have head and shoulders, so you have to take into consideration, learn more about those patterns and all. So on here I'm just going to talk only about head and shoulders and patterns, head and shoulders and channels, I mean. And I can actually explain to you like how this can also be a flag. So as you can see, the price is actually moving to the downside. Then you see here, this is an inverted flag. So you can see price here, then it will actually break and go to the downside. So this is the stick, then this is the cloth of the flag. So it's as easy as that. So I'm just going to show you another structure that I saw. So another market pattern that I saw is a head and shoulder over here. So if you're completely new, you can actually tell this you can consider it as a as a left shoulder, right? So price move from here, come back. So this line you can consider it as a neckline. So this is a shoulder, then this can be your head, this can be your right shoulder, then the line you still consider it as a neckline. So as you can see, this is a head and shoulder. So you should watch, I think, the market structure episode 1. I actually explained how you can actually get returns on head and shoulders. So from this area onto the top, you can actually get returns from this area going to the downside. That's how you get the returns for this. So if you're trading head and shoulder, you know that the returns that you're going to get from this area are the same as going to the upside. So from this area to here, that's the same area from this area going to the downside. So these are the two uh, patterns that I'm going to show you here. You can actually learn more about patterns, like there are a lot that you can use. Then you can only take the ones that are actually working for you. So as you can see, we have two that are already working, and you can actually trade bouncing off. So the last thing that I'm going to talk about on price action is candlesticks. So let's go on to the chart and see. So the only candlestick that I take into consideration, so it's the pin bar and the bullish engulfing and the bearish engulfing. So things like harams, dojis, some of those I don't really take them seriously, because if you look even on investing.com, they consider these candlesticks as low reliability, so I don't really take them much seriously. So I'm gonna show you the pin bar. So this is a bullish pin bar. You can see the long wick to the downside, then a small body over here. Yeah, that's the small body. So this just shows that bears has lost power and bullish are about to take over. So you just have to prepare for a buy, and you can see price actually move to the upside. Then here you can see this. This is a bearish pin bar, a long wick to the upside, a small body over here. Then price actually went to the downside. Like you have another one over here, long way to the downside, sort of a body. So this just shows that bulls are about to get some powers here, like get some superpowers to the upside. So you have to take into consideration also this head and shoulder, like the returns, are they complete or not? So if they're not, probably maybe you might get only a pullback to here and continue to the downside, or you might see a continuation to the downside. So candlesticks, they only work in favor of patterns and trends, so don't just take them for the sake of taking them. So like as I showed you, so this the bearish pin bar, bullish pin bar. So the next the other one that I actually take into consideration is bullish engulfing or bearish engulfing. So as you can see here, this is the bullish engulfing. So it takes into consideration 1, 2 candlesticks that are already engulfed. So when you say engulf, it like it shadows the previous bear candles. So these were bear candles and they were shadowed by one bullish candle. So you'll see price actually continue to the upside. So once you see that, like just know that this is engulfing engulfing candlestick. So we're gonna continue with our price moving to the upside. So like here, as you can see, I don't have any other example for bearish engulfing. Yeah, pretty much these another example. But if there was, I could have just shown you. So that's pretty much on candlesticks also. So you just have to take into consideration those ones that only works for you. So backtest all the candlesticks that you want to use, backtest the type of channels, trends that you want to take into consideration, the patterns, the structures, backtest all those stuff, guys. Then you can actually say like, okay, I have a concrete trade setup that I can take only with these kind of things. So just gonna explain a little bit on indicators, then you can actually get some knowledge on them. So indicators, so just a little bit of explanation. So oscillators, they're there to give you divergence or convergence of price with like indicators. So when you see price moving in opposite direction with the oscillator, price is supposed to follow the oscillator. That's the indicator is supposed to show. So when you see price moving against the oscillator, you just have to take the direction of the oscillator. So prepare either to buy or sell to the direction of the oscillator. So let's say price moving up and the oscillator is moving down. So prepare to sell when it's like that. It's called divergence. Then when price is moving to the downside, then the oscillator is moving to the upside. That's convergence. Price is supposed to go to the upside and follow the indicator. That's what the oscillator is supposed to do. So I think I did a video like long back. You can check it out on this channel like below. It was still a boring because it was my first video, I think. So you can check that out. You can see divergence and convergence, moving averages. So moving averages, they're supposed to give the trends of price. So like it's supposed price is supposed to follow that moving average. So like if the moving average is like below but moving in the upside, it's supposed to just touch and go to the upside um with the moving average. Then if it breaks to the downside, then it's supposed to move to the downside. So like the moving average is the worst of the indicators because like you can't you can't actually rely on like on price touching the moving average. Then you can say I can buy, go to the upside with the moving average because you don't know like where and what's gonna be your target. So like this is a no-no for me. Volumes, they just to show the volatility of the market. So this is really helpful. So like if you wanna see, you have done your technical analysis well, so you draw your support, you found patterns and your structures are concrete, like you are in a good trend and like your candlestick they're already confirmed. You just have to check like is the market volatile enough so that you can actually place more or less volume onto there. So this is pretty much helpful. But indicators, guys, I don't know. I mean, if you can use it, that's up to you. For me, as you can see, even my charts there, like I removed all the indicators. So that's pretty much it for this week, guys. I hope you like the video. Then please subscribe to the video. Just please subscribe to this channel if you like all the content that we post. We're gonna be posting more and more videos onto here. Cheers. So still on support and resistance. So now on the horizontal type of it. So we actually did the trend lines. So the horizontal type of it. You can see here. So I'm gonna put two lines just as I did on the channel. So you're gonna see this area. So you can just move it like this. This is the highest highs that we have. First high, 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 then lows on the touches here. So when price is moving up, it's gonna face resistance here. That's why we call this resistance. But when price is actually moving down, we get this as support because price being supported by this line moving to the downside. So when only price is facing a hard time to break this, so consider this line as resistance. So that's how you take into consideration if you want to buy or sell. So you can actually buy the highest high. So if you have like three touches here, that's the maximum that you can actually get. Then the lows that are this side, then you can actually see that you can actually buy at the lowest point, then sell at the highest point. So these are the highest points that you can get, and you can sell on those ones. So you sell on support from up, then you can actually buy from support from down. So that's it for on support and resistance.